Hello and welcome to a fall mid-September edition of Matt's Minutes. As you can see, I have a buddy right behind me. That's Cooper, my 13-year-old boxer Shar-Pei dog. He's hard of hearing, but he likes to sit up here when I talk to clients over the phone and video. Wanted to do a session on market volatility and market jitters and kind of uncertainty that we see all over the headlines, quite honestly, for most of the month of September. We are also sharing through our newsletter this week an interesting article through CNBC where there was some research done about market volatility, the S&P 500 as an example of the market. And if you look over the last 20 years, according to CNBC and Charles Schwab research, the S&P 500 over 2 decades averaged about 6% per year annually. What's interesting is out of 20 years, if you actually just missed the 20 best trading days of those 20 years, your average annual return would have been 0.1% a year. And I'm not misstating that, from 6% a year down to 0.1% a year for 20 years. So that's pretty profound. If you think of the math, 20 years, 365 days a year, that's 7,300 days. But remember, the market's generally open Monday through Friday with the exception of a few holidays. So really, with 5 trading days a week on average over 20 years, that's around 5,200 market days. If you miss 20 of those 5,200, which is less than 0.4% of the days, you missed out on 99% of the return. So the point of that research is really just more of a psychology and backdrop in the midst of what we see are extreme headlines to get people to panic and bleed into fear and uncertainty. So largely, the world is trying to come out of the pandemic. I know we are still working through the Delta variant and healthcare concerns currently. The Federal Reserve is currently keeping interest rates really low, which helps to stimulate the economic engine, if you will, and the world is still trying to move forward through the pandemic. So there are a lot of signs, if you can pause, take a breath, look out over the next 1, 2, 3 years maybe, where we think kind of the global economic engine is still going to continue to move forward. That said, how do you get through volatility? One, make sure you review your Riskalyze score with us, any of us or your individual advisor through Richmond Brothers. For a quick refresher, Riskalyze is a risk score based on a scale of 1 to 99. 1 being ultra conservative, 99 being ultra aggressive. And let's say you ended up and had a risk score of a 30. That doesn't mean 30% of anything. So don't confuse that with percentages. That just gives us some tolerance ranges that, hey, a risk 30 portfolio on average might have downside of 4 or 5% and upside of maybe 5 to 8%. And so that kind of sets goalposts of expectations based on how you're invested now. The higher your risk score, the more choppy your portfolio will be. The lower your risk score, the less choppy your portfolio will be. It doesn't totally minimize risk the lower your score is, but it should help reduce some of those extreme moves that you may be able to see otherwise. So for those of you that are getting concerned about the market and headlines, this is also a reason why through some of your portfolios, especially for retirees, we have a large allocation to fixed income, which might be a little more stable, might be names like Guggenheim as an example. And what you find traditionally is most of that fixed income category, risk-wise, is on a scale between maybe 1 and 25. And so that's certainly in the lower end of the spectrum. Another category or asset class that many of you might have exposure to, which again would add safety nets on the portfolio, would be fixed or fixed indexed annuities. Generally speaking, those are going to be in that risk 1 category. So even though those are boring, very stable assets, those are perfect assets for times like this when the market is choppy or volatile. So keep that in mind, and as always, reach out and let us know if you have any questions. We haven't quite seen a correction yet. A correction is going to be a 10% drop from the market highs. There have been a lot of 4, 5, 6% swings from the recent market highs if you looked over the last 12 months or so. Corrections are healthy. Corrections are a normal part of the market. So we think it's really imperative that we continue to review your individual risk scores with you. Make sure you understand what those tolerance ranges are. And if for some reason that's not a comfortable level anymore, we can suggest some alternatives to either bring that risk down, or for those of you that want to add more risk, to basically up that risk score. And so happy to continue to review that. Also, for those of you that are retired, through choppy times, what we've tried to work with a lot of you individually on is making sure there's actually a retirement income plan. And so that there are places in your portfolio that hopefully are not market dependent, to be able to draw your monthly income or withhold taxes from. So keep that in mind. In addition, there's a lot of talk about tax changes perhaps later this year, perhaps 2022. So we've had a lot of continued feedback and a lot of continued action from a lot of you, our clients, with respect to asking questions about IRA to Roth conversions, other strategies to minimize future taxes. And then some of you who are still working and are in higher incomes are taking advantage of the backdoor IRA, Roth contributions and conversions. So those are some things that we'll see what happens with the coming tax law. There's a lot of proposals out there now, and keep in mind they are just that, proposals. Nothing has been signed into law. So we will stay on top of that. Your advisory team through Richmond Brothers has an upcoming tax review session with Ed Slott, who is one of our affiliates that we retain to keep up to date on IRA and retirement tax law this fall. And then also I am going to be heading to actually a Riskalyze conference to take a deeper dive into that software, and if there's any other thoughts, ideas, or strategies that we can help serve all of you better. In the meantime, if you have any questions, you can always reach out to us directly. Questions at richmondbrothers.com or 517-435-4040 is our main line. Thank you so much for tuning in, and thank you so much for being part of the Richmond Brothers family. We wish you all a healthy, happy, and safe start to the fall wherever you may be. Thank you.